If you think your down payment is the only thing you have to worry about when buying a home, I need you to think again. In this video, we're gonna break down all the hidden fees that people don't talk about so that you can be prepared when you're buying your home. My name is Annalise Karowski. I'm a real estate agent with JPAR Modern Real Estate, and I help both buyers and sellers make smart moves and avoid surprises. Let's unpack lender fees. Now, not every lender costs the same, but they will entice you with a good rate. So when you're shopping for lenders, and if you're shopping and two of them give you a very similar rate and one of them gives you one that makes your eyes pop open because it's so low, I need you to think twice and ask for a loan estimate, because they sometimes don't tell you that you're actually paying for that rate on the back end. When you're talking to a lender, ask them for these common fees that are typically not talked about when you're making your decision. Ask them about origination fees, processing fees, underwriting fees, third-party fees, credit report, and discount points. Now, not all of those fees you can really negotiate or change. Some of them are just what they cost, but it is a good idea for you to understand how much they charge specifically. The origination fee is the cost that you're gonna pay the lender to actually service your loan. So it's basically you paying for them to do the work. Typically, this charge is about 1.5% to 1% of your loan amount. Sometimes lenders will advertise that they have no origination fee, but they make up for it with higher rates and hidden costs on the back end. Always compare the APR and not just the interest rate. The underwriting fee is the cost for the lender's underwriter to verify your income, your debt, your risk, your credit, to make sure that they can qualify you for the loan. This can be anywhere from $400 to $800. The underwriting fee is necessary in this process because it is required to find out if you can qualify for the loan. The processing fee is for the team that collects all your documents, like your W-2s, your pay stubs, anything that you're submitting for your loan to be written, and communicates between the agent, the lender, processor, and underwriter. This usually costs from $300 to $700. Discount points are optional, and they're something that you can pay for to buy down your rate to bring your monthly payment down. This is something that's really important because you can use this to make your payment much lower and more affordable for you so you can save money over time. Just remember, do not only focus on your interest rate when you're talking to lenders. Actually get a loan estimate. You will have to get pre-approved with them, but you need that loan estimate to actually figure out how much working with that lender will cost, and this adds up. Buying a house can be expensive, so you want to make sure that you're saving every dollar that you can. Closing costs are a surprise to a lot of people, and they are a hefty amount, so you do need to prepare because you need your down payment and these closing costs in order to purchase a home. Closing costs can include title insurance, recording fees, escrow fees, prepaid taxes, HOA transfer fees, and much more. You are actually going to spend 2 to 5% of your purchase price on closing costs, so you do need to make sure that you're budgeting for this when you're saving for a home. Closing costs can actually be paid by the seller, so when you are talking with your agent and you're strategizing what your offer is going to be, talk with your lender, figure out how much money you actually need to close on this home so that you can ask for this money in your original contract and make sure that you can afford the closing costs. What we've talked about so far are costs that come at the end when you're actually purchasing the home, but there are costs during the transaction. Inspections are not required, but they are highly encouraged to protect the buyer during the contract. This is also a place where you can get money back on repairs or anything that needs to happen in the home that the inspector finds that's wrong. Inspection costs depend on the inspection company you're using and also go off the size of the home and time that it takes to do the inspection. So depending on the home size, it could be anywhere from $300 to $600. On top of the general inspection, there are 2 other things that I highly encourage my clients to do, but is not required. One is a radon test. This does cost extra, but radon is a odorless gas that is produced here in Colorado that can cause lung cancer. So it is very important to get that tested because most of the time you can get this covered by a seller to put a mitigation system in. It usually costs anywhere from $1,200 to $1,600. So it's not a huge cost, but it is something that you want to make sure is not in your basement or floating around your home. The next thing is a sewer scope. A sewer problem can cost you tens of thousands of dollars. So spending a little extra on that sewer scope will save you so much money if there's a problem. Sewer scopes can cost anywhere from $150 to $250, and radon tests are around that $100 mark. Just remember that even when you're buying a new build, you should still be getting these inspections, because just because a house looks great and it's not old does not mean that there's not going to be problems that are found, and this can save you so much money or just help you avoid getting into a home that you're not prepared for to take on the amount of repairs that it needs. Appraisals are required when you are purchasing a home with a loan. Regardless if it's conventional or FHA, you do need an appraisal. The appraisal is basically where a non-biased third-party licensed appraiser will come and find what they believe is the true value of the home. The bank uses this appraisal to make sure that they're actually going to loan you the true amount and value of the home. If you have friends or family that purchased a house in COVID, you may have heard them talk about an appraisal gap. An appraisal gap in high, crazy markets is where buyers are outbidding the price up, or just home prices are really high in general. They're higher than the true value of the home. So when the appraiser comes through and evaluates the home and gives the true value to the bank, typically in COVID, we saw that the appraisal actually was lower than what the buyers were offering on the house. The banks do not loan on the actual purchase price, they loan on the appraisal amount. Because they were coming back below, buyers had to put an appraisal gap in their contracts saying that they were going to bring cash to close that gap, hence appraisal gap. A fee that everyone forgets about is earnest money. This is a cost that you pay within the first 3 days of going under contract. Think of earnest money as a good faith deposit or even just a security deposit. It shows the seller that you're putting skin in the game and you have commitment to this house. So the seller does not actually get and hold this cash in their bank account. It goes to title, so it is held by a third party. If you terminate within a termination deadline on your contract, you will be able to receive this money back. If you choose to continue in the contract and purchase the house, you will see the earnest money as a credit to you on your closing statement because you're paying it like a security deposit, so you do get it back. It goes towards the cost that you're paying for your closing costs at the end of the transaction. Other fees that you need to take into account are homeowners insurance fees. Now you will get a quote done during the transaction. You actually need it for underwriting, but this can be depending on the house and depending on the type of home, because condos and townhomes need a different type of insurance than a single family home does. If you're purchasing a home in an HOA community, you will be paying HOA fees. Now HOA fees can completely vary, specifically if you're in a condo, a townhome, or a single family home. You want to make sure when you're looking at homes, and if you are on a strict budget, that HOA fee fit in that budget, because it will be seen as a debt when you are getting underwritten for the loan. So you need to make sure that you qualify with that HOA fee. Now HOA fees for condos and townhomes can actually be pretty expensive here in Colorado, especially if you're in Denver or very high populated demand area. Make sure when you're looking at homes and you're doing the research on that home that you understand what the HOA fee covers. Things that HOA fees can cover are trash, sewer, water, maintenance grounds, maintenance structure. You want to make sure if you're in a townhome or condo that you understand if it covers the roof or not, especially here in Colorado. It also can cover snow removal. Condos and townhomes sometimes need just a walls in policy, so your homeowner's insurance can actually be less, but you need to double check that with your HOA to make sure that you're getting the right type of insurance. Everybody gets swept up in the excitement of buying a home, but make sure that you budget for moving expenses, utility fees, and any immediate repairs that need to happen before you actually move into the home that you did not get taken care of during the inspection process. Between your lender fees, closing costs, inspection fees, and more, you will end up spending anywhere from 3 to 7% on top of your down payment. In a market that we're in October of 2025, it is a crazy buyer's market that a lot of sellers are paying rate buy downs and closing costs. If you want to know more about how I can negotiate that for you in Colorado, my information is below. Thanks so much for watching.